Hello, folks. If you're a fan of comedian Nate Bargatze, you know exactly what I'm talking about. Hi, I'm Scott Welsh, and we get together at the beginning of each month to do a long form video about topics that are important to me and hopefully are important to you. And this is maybe the most important thing I've ever talked about, and I'm pretty sure I've never said that about any other video. But this is a big one. And because of that, let's go over the disclaimer. Past performance does not guarantee future results. We're going to talk about some numbers that may be important or may change your mind, perhaps. So keep in mind these are hypothetical, meant to educate and entertain. These are not actual trades from actual trading accounts. Got a question recently, and it's the big one. It is the big question. It's the thing that we're all thinking about. It's the question that will change our lives forever. If you had $20,000 to invest for the next 20 years, what would you do? Now, the culture currently is, this is what we do. We take our nice partner and we go to a nice financial advisor, and I don't know why this screen is not turned on. He probably should be turning that on, but he prints out some very nice papers, and look at that. She's pointing to it. That's the key. Look at that. That's the key for the next 20 years. Their lives just changed. I don't know what's this paper over here. Maybe they should have read that closer. But that's our culture. I mean, that's how we answer this question as of right now. Is that a good way to answer it? What if it's a horrible way to answer that question? But it doesn't matter that I'm going to give a free trading system that could possibly, well, you'll have to decide if it changes anything in your particular culture, your particular expectation. It doesn't matter if I give you something great. Because the real question is, do you have the ability to follow it? Do I have the ability to follow it? Will fear kick us out long before 20 years ever happens? It's all great to get some YouTube internet knowledge, but what happens when we lose our first trade? What happens during our first drawdown? It's broken. I'm useless. I was never meant to be a trader, and we're gone. We're out, and we lose. Or even worse, we look at our phones. We're in a strategy that works for the long term. It's going to change our lives forever. All we have to do is not fall asleep in the getaway car. All we have to do is keep going. And yet, we get on our smartphones, the cigarettes of the 2020s. We get on our smartphones and, well, someone else is doing more. Someone else is in Bitcoin. Someone else is in Tesla a while ago. Right? And fear of missing out kills us. It takes us right out of something great because we're so edgy. If we are too fearful, if we are too scared, if we will run at the first new shiny object, nothing will ever work, and our financial lives are forever not changed. But there is a cure, or at least there's one way out. Happy ignorance. Go sit on a hammock for the next 20 years and let whatever thing you choose go. That will solve the problem. You can also be happily ignorant and come back 20 years and look at your Enron stock or look at something else that's gone down quite a bit, right? You hear about the people who, I never checked my account, now I'm a millionaire. But you never hear about the people who, I never checked my account, now I have nothing. Happy ignorance is a way. Let's make it make money for us and not give us a 20-year surprise that's horrifying. Okay. But what's the culture right now? If we're investing $20,000 for the next 20 years, what choice do we have? According to the billion-dollar self-help financial industry, we only have one choice: the stock market, and specifically index funds. The stock market is the greatest wealth producer in the history of man or womankind. Kind of. I don't want to get into that right now, but I mean, yes, it does produce wealth. And specifically, since we're all too stupid to trade stocks, or it's impossible based on academic studies that aren't true, we should just trade index funds. And here's the program. Save your money? Good idea. Live below your means? Great idea. Use index funds? Terrible idea. Well, it's not a terrible idea. A lot of smart people do it. It's fine. There's no fear involved, right? If we use index funds, that's the great thing. We've all been brainwashed. Our culture is such that index funds aren't scary. Well, you're telling me you're in an index fund, you didn't make money for 13 years like you wouldn't have from 2000 to 2013? Man, no big deal. I'm in the stock market, right? I'm doing the right thing. That's the way our culture looks at. There's no fear in buying index funds. There's no fear in stocks. There's only fear in something different, scary, right? And there's no work involved, which is good. I mean, we're not allowed to pick stocks, right? Because it's impossible. It's too hard for our weak little pea brains. But there's no work involved in index funds. Like, you got your money in index funds? Cool, man. That's awesome. No work involved there. You can go to your hammock and come back in 20 years. But what about something else? What about a different way to invest 20,000 for 20 years? I mean, what about Bob? Specifically though, today, what about Forex? Okay? I understand, right? It's ridiculous. But just for the sake of being ridiculous in our YouTube special video of the month, let's talk about using Forex for the next 20 years. Now, Forex, isn't that scammy? Yes. The Forex world is very scammy. Isn't it dangerous? Yes, it's dangerous. Other things dangerous too? Absolutely. But is Forex dangerous? Yes, it's dangerous. Is it esoteric, which is a word I love because it means knowledge that is only known to a few and not to others? And the word is esoteric, and it means esoteric. Anyway, yeah, Forex, there's some weird words and there's some weird concepts. I get it. It's absolutely all of those things, right? Is it scammy? Well, because a lot of people don't know about Forex, yes. A marketer, actually, marketers are not a bad thing. Salespeople, hustlers, better words. Marketers try to do good. Salesmen and hustlers try to try to make money for themselves. Shall we stick to those definitions? Great. I'm glad we agree. A hustler, because you don't know anything, will show you a bunch of figures that couldn't possibly be replicated and take all your money based on false claims and preying on your innocence. Mine too. Then, once people realize that it's all a fraud, the scammers then move on. That's how they do it. Because there's enough ignorant, I mean, who knows about Forex? I mean, the ability to scam is all over the place, right? The ability to scam, the area to scam is everyone, basically, except for the few people who know about Forex. So scam and move, baby. Scam and move. I make a great living giving people garbage. That's not true. Of course, if you have something fundamentally sound, it's not scammy anymore, is it? And there are price shocks. Yes, the Swiss franc had a huge price shock, which could have been very, very bad. The British pound had a price shock. Also could have been bad if you're going the wrong direction. But are there price shocks in stocks? Sounds like Dr. Seuss. Yes. Can stocks gap overnight? Yes. Can they go down for a month straight? Yes. Can futures contracts in crude oil go below zero, which is mind-bogglingly impossible? Yes. Shocks are everywhere. They're in Forex. They happen, I mean, I've seen, 2 or 3 of them since 2009. Happens, right? Be aware of that. And Forex uses weird words like pips. Pips is just a point, or a tick. If it goes up 1 tick, it goes up 1 pip. In stocks, that would be 1 penny or 1 point. In Forex, it's a pip or a point. It means the same thing, but it sure sounds funny. Here's how strange Forex is. You ready? Here's a chart, a weekly chart of the British pound Japanese yen since 2016-ish. There it is. I mean, look at that. It's up, it's down. Okay. Now let's compare that weird-looking esoteric chart to Pfizer. Pfizer's been in the news lately. They've made a vaccine, I think. Yes. Oh, here's the weekly chart of Pfizer. Wait a second. Wait. That's weekly of Forex, which is weird. That's weekly of Pfizer, which is not weird. Wait. Pfizer looks worse, looks wilder, looks weirder than Forex, right? Now, we're not taking leverage into account, of course, but do they really look all that different? Is FX really that scary? Well, you have to decide, but doesn't look that scary to me. Again, instead of a penny, it's a pip. That's weird. The real difference is when we get into leverage, which is a good thing for us. But if it goes up a tick in the stock market, it goes up 1 cent. If it goes up a tick in Forex, it could be 10 cents or a dollar. 10 cents, dollar, $10 sounds like a cheer. Or it could be $100. The great thing about Forex is that depending on what trade size you use, and it trades in lots, one full lot is $10 a point. You can do less. You can do $1 a point. You can do 10 cents a point. You can do $100 a point. You have the flexibility in Forex to fit it to any size account. That's awesome. If you have money saved up that you want to use for the next 20 years, it can be any amount of money. It can be $1,000 or $1 million, and Forex can handle it without blinking an eye. If you're trading stocks for the next 20 years, unless you're buying and holding, you better get a bigger account than that. Better get 25,000, right? Now, I guess you could start an index fund at $1,000, I suppose, but I mean, nobody would tolerate. You should have your whole life savings in it. No one would tolerate $1,000. You could, though. And Forex, though, however, is made. Now, is that scary? Right? Forex is made for account sizes, but it's weird. It's adaptable, but it's weird. It uses words like pip. It's the relationship of two currencies to each other. Too scary? Well, let's keep going. Here's what Forex really is. I mean, here's what it is. Let's lay it out. It's a 24-hour market. It trades all the time. Doesn't stop at 4 o'clock. It keeps on going. And it's got the leverage, as we've already mentioned, to use any size account effectively and aggressively if that's the way you want to go. You have the flexibility, which makes it adaptable. It's uncorrelated to the stock market. So if you see some news on TV, it doesn't mean that something happened to your Forex account. It responds to technical analysis because it trades 24 hours a day. And it is the relationship of currencies to each other. It's not some emotional stock news. Oh, somebody tweeted about Tesla, so it went up. Or, oh, yes, they made their sales targets, but they dropped in their forward guidance, so the stock goes to zero. Or it went up, it beat expectations, but it didn't beat it by enough. I mean, it's just so tedious, borderline exhausting to try to make sense of why stocks go up and down, especially lately, right, GameStop? Whereas Forex is so much calmer. Yes, there are news events, but it's very technically driven. It responds to technical analysis, which is nice if we want to use an automated system for 20 years. And it's only got one gap per week. Stock market, every single day, something bad might happen. And they love to report earnings after hours. Why? Why after hours, you chickens? You don't want to do it during the day? It's such a weird thing. How come nobody talks about that? Why do they report after hours so that all the fake trading and post-market and pre-market can happen, and then the stock, it's just ridiculous. Fun, but ridiculous, right? There's no pre-market, no post-market in Forex. You just trade, and there's only one gap a week between Friday and Sunday, and it's more liquid than anything. Forex is the most liquid market in the world, period. So let's move on. We need, if we're going to trade this market, we need a fundamental principle that's been around for hundreds of years. Oh, I know, breakouts. And we need something that moves, right? We want our money to increase in the next 20 years. We aren't going to trade everything. We're going to trade one thing or a couple things. But today we're going to trade one thing that we know moves. How do we know it moves? Just look at the chart. Okay? Now, an index fund is a fundamental principle that's been around, but trend following / breakouts have been around for as long, actually longer, and they've done better if you do your own research. So yes, an index fund does have, maybe that's why people aren't afraid. Index funds are safe because they've been around. Well, trend following's been around longer, and it's done just fine also. Okay? Now, I promised you a strategy, and we're 14 minutes in. You're going to get the strategy. We're going to buy breakouts, right? We have to invest for the next 20 years. I want a principle that's going to be around and working for 20 years. So let's buy breakouts. Great. How do we come up with our breakout? Oh, I know. Let's use the most famous breakout ever. On daily charts, what's the most famous breakout? 20-day breakouts. Ever heard of it? It's what the Turtles did. Part of their strategy, right? Ever heard of a Donchian channel? One of the most famous trading methods of all time, 20-day breakouts. 20-day. No optimizing here, just 20-day breakouts, okay? Oh, what's the most famous trailing stop? 20 days of price. If you're up in a trade and it breaks below the low, you're going along and it goes below the low the past 20 days, get out. Turtles talked about that, and so did Donchian. It's been around for a long time. I didn't optimize for a long-term investing strategy. I just used stuff that's been around. Okay? Now, here's where the strategy today we're talking about goes terribly wrong. In trend following, in breakout trading, you're never supposed to use a target. Well, we're using a target, 450 pips, 450 points, if you will. You're supposed to use volatility stops. The turtles taught us that. You're supposed to use ATR stops. Well, we're not. We're using a static stop, 140 pips each time, period. And we're never going to limit our upside. Oh, wait. Yes, we are, right? You're not supposed to limit your upside. No, no, no. But we are. 5-day timed exit in our 20-year strategy. If it's going to do work, you better get it done in 5 days, instrument, or we're out of here. Trend followers would panic and slap me in the face. You can't stop the trend. You have to let it run. I'm not. Sorry. Just not. Okay? How does all of this do? We have our fundamental, boring breakout with our specialized, weird, different, blasphemous things. How we do? Well, trading one lot. Again, that's just the basic standard trading amount. Trading one lot on our hypothetical $20,000 account from 2003 to 2021 did this. $156,000 of profit, got a nice profit factor. The drawdown, what's a typical drawdown for an index fund? Anywhere between 50 and 75%, depending on which index fund you're using. 50% happens all the time. This one did half that. Half. Okay? Interesting. This is the absolute drawdown. This means the amount we went below our original stake. We only went $1,200 below. Okay? This was our max drawdown, but this happened after we had already made money. So we did lose this amount in a bad losing streak, but we'd already been nicely profitable, as it turned out. Just lucky, I guess. And here are the profitable trades. Doesn't win that much, only 46% of the time. That is death to some traders, but we're trying to change a culture. We're trying to get used to such things. Now, neat numbers, right? How do these numbers compare? Well, here we go. From 2003 to 2021, if you reinvested all your dividends, the absolute best case scenario for an index fund, 20,000 turns into 97. Whoa, I'm a smart investor, baby. Look at that. Now, if you're a real person with a real life and you have to spend your dividends maybe to survive, 20,000 turns into 62.4. It's still pretty good, right? Tripled my money because I saved my pennies and I believed all the academicians, and my 20 turned into 62 and I'm great. Here is what we're comparing it to. That system we just talked about turned 20,000 into 176,000. Okay? The best case is 97. This long-term portfolio turned our money into double, roughly, right? Twice as much money using a Forex long-term system. Okay? Now, that's awesome, right? Well, here's the problem. Losing years. This system doesn't win everything all the time wonderfully. 2006, we would have lost money. 2003, now that's only part of 2003, the end of 2003, because that's how far data goes back. So yes, you would have lost, but only would have been a couple months. Losing year in 2010, losing year in 2015. No one can handle a losing year, right? My index fund would never have a losing year. My academician study, the people who are telling me that the markets are efficient, they don't have losing years. Oh, wait a second, they do. Index funds since 2007 have had 2 losing years. That's not that many, right? It's great. How many did our long-term Forex lose since 2007? 2 losing years. Starting 2007, would have had 2 small losing years. The Forex losing is exactly the same as the index fund losing, for twice the money and less drawdown. It's the same amount of losing. Huh. Well, there's all sorts of danger in what I'm talking about. This random person on the internet. We can't trade just one thing. Who would trade just one chart for the next 20 years? This is my life. It's too risky. You have to diversify. Well, here's my question. Don't you just trade one Vanguard index fund? No, I trade a bunch. Fine. But most people, right, they're not going to shop around. Now we're getting into choosing. Now we're getting into what we're not supposed to do. A lot of people, and we're told in these self-help books, just trade your index fund. That's it. Put all your money in an index fund. Well, isn't that one thing? Well, it's diversified. Is it, though? I mean, if the stock market goes down, all the stocks go down, right? It's not like it's that diversified. And it still has 50% drawdowns. So how diversified is it if it has a 50% drawdown? Okay? Wait, I trade mutual funds. I'm smart. I get it. You should be smarter. Mutual funds have a chance to make much more than the market, right? But don't you trade just one? No, I have a bunch. Well, it's the same argument, right? Well, then you're doing what you're not supposed to do, right? We're told we can't pick stuff. We're too stupid to pick stuff. My point is, trading just one currency pair is really no different than trading just one index fund. One is frowned upon, one is not. Isn't that weird? Trading one mutual fund is smart. Trading one currency pair is dumb. Is it, though? Now, here's another tip, okay? I went and found the best mutual fund in the last 15 years. This is by Investors Business Daily. It's not my choice, right? It is the best. And if you want to go put your money in BPTRX, do it, right? Do it. It's the best. How best is it? Here's what it did in the last 14 years. From 2007 to 2020, BPTRX made 317% on our money. Awesome. What did the index fund do? 154. This fund doubled the S&P. Okay? It made 162% more. Look at that. Killed it. This fund averaged 22% per year because it was up 148% in 2020. Awesome. And it never loses either. Wait a second. Oh, the best mutual fund that we can find in the last 15 years lost in 2018, lost in 2015, lost in 2011, and lost huge in 2008. Huge. Huh. 4 losing years since 2007 to get to that number that's twice as good as the market. If you were investing in that, could you take these losing years? Yeah, because it's what you're supposed to do. Well, Forex loses less than that, right? Interesting. Here are the numbers. That index fund since 2007 turned 20 into 30,000. It's great, right? That's the index fund, right? That's what I just said, right? 20,000 in an index fund goes to 30. Great. Smart. I'm the best. The best mutual fund, which I just showed you, turned 20 into 63. Whoa, right? I said it was double, right? Look at that. I'm an investor. And our long-term Forex system turned 20 into 163,000, right? Over 2 times as good as the best mutual fund we can find. Our simple little system. Now, if you invest in a mutual fund, how do you compound your gains? I mean, they just kind of do, right? You put money in. Like what do you do? Well, in Forex, if you're trading a system, guess what? Because it's so liquid and because it's so flexible, if your account goes up, you can bet more. And if your account goes down, you can bet less. If you're doing a trading system and not just buying and holding, you can compound your gains. Isn't that cool? So, just for fun, what if we took our little Forex system based on old-time settings, of course, right? And we compounded. So if our account goes up 10%, then we raise our trade size 10%. Here's what happens to our little 20. They say compounding is the 8th wonder of the world. Our $20,000 account from 2003 to 2021 would turn into 5.4 million. I think that's better than 97,000. Correct me if I'm wrong, okay? Oops. 5.4 million I think is higher. Okay. Where does that leave us? If you ask me the question, what to do with $20,000 for the next 20 years, I would pick Forex. That's what I would do. It isn't perfect. It's dangerous like anything else. I would argue less dangerous than other things, but it's dangerous. It has losing years. If we can't remember the beginning, if we can't take fear and we can't lose, then it doesn't matter. It has a low win percentage. If you need to win a lot, then this is not for you. I'm only trading one thing. What if the pound yen stops trending? It hasn't stopped trending in 18 years, but what if it stops tomorrow? It could. The stock market could turn into nothing, right? It can happen. But it is a trending instrument. Pound yen has been trending for 18 years. It uses a principle that's been around for hundreds of years. And we didn't really do any optimizing, right? We did a little bit of target and a little bit of stop, but we just kept a nice high risk to reward, and we gave it a timed exit because we're not going to tolerate any sort of up and down, right? You're going to get 5 days and that's it. So there you go. That's my answer. If I had something that I needed to trade for the next 20 years, I would use a trading system, and specifically, I would trade Forex. What do you think? People think you're weird? Just change the culture? Instead of just all of us nodding our head and saying index fund, is it time for maybe we start thinking of other options? Could we be doing better? That's why I do these videos, to discuss such interesting topics. If you want to email me, just go to my website at scottwealthstrategies.com, go to the contact page and email me. I do answer them. Crazy. And that's Twitter, and I am on Facebook, even though I'm not active much on either one of those two. I do show up now and then. That's a video for this month. We'll be back next time with more fun things to talk about. Bye for now.